What was your takeaway from this week, Rachel?
Listen, we all knew this was going to be a tough week, but we're talking about the three biggest players in advertising. We have Google, we have Meta, we have Amazon. They each play a fundamental role in the ecosystem, but times are changing. With Google, they've had the stronghold on search, but they also sit on this amazing asset, YouTube, which is an incredible place for brand awareness and engagement. You have Meta, largest player in social. They've done a phenomenal job of building out full funnel ad solutions across Facebook and Meta. And now you have Amazon, the largest player in e-com, which is also another way of saying they're sitting on a treasure chest of purchase data waiting to be monetized. And what's changed in the
No, I'm sorry to interrupt you, Rachel. I want to zero in on that because this is what surprised me about this earnings report from Amazon. Last quarter, the upside surprise was advertising. And this quarter, the downside surprise was that AWS didn't come in to save the day. But we didn't really even talk about advertising. And you're basically saying that this is some unlocked or still locked up potential for the e-commerce giant.
Absolutely. AWS was an amazing way to offset margins. Advertising is an amazing way to offset margins in the losses of their traditional retail business. So Amazon's ad business grew 23% in Q4. It was now becoming a very, very close player behind Meta. And the reason for this is because of the headwinds that Google and Meta have experienced. Changes in Apple's iOS 14, cookieless internet, they started to undo the way that direct response advertising fundamentally worked in platforms like Meta and Google. As a result, advertisers want to be able to demonstrate the ROI of their marketing investments, and Amazon is sitting on all of this purchase data to be able to demonstrate to advertisers direct attribution. And so Amazon is really riding the tailwinds that are, in fact, Google and Meta's headwinds.
Let's zero in on Meta. That was the surprise of the week, probably. You know, the response, Meta's shares jumping by the most in a decade Thursday. But the other data point is Facebook at 2 billion daily users, up 70 million from a year ago. What has Meta done to make its platforms interesting again? Because presumably the market reaction is the investors saying, this bodes quite well for advertising revenue going forward.
Yeah. So the way that people measure the efficacy of their advertising dollars is through this mythical model called media mix modeling. And what it requires is that brands need full funnel marketing. In order for the math equation to work, they need to have upper funnel media that's letting people know, hey, I exist in the world, mid funnel media that's encouraging them to buy, and then bottom of the funnel media that's pushing them towards the path to purchase. Bottom of the funnel media, think Amazon, think Walmart, think Instacart, all of retail media, it's typically expensive. Upper funnel media is more affordable. Meta remains to be a really strong platform for upper funnel media. MicMac, we work across 800 of the biggest brands in the world. And in 2022, we actually saw paid traffic within Meta increase by 8%. We saw a decline in Google by 7%. And what that demonstrates is that advertisers still see Meta as an upper funnel channel. And what's happening is that people are moving dollars out of Google, because primarily that's search, into Amazon, because Amazon is the new search.
Hey, Rachel, in aggregate, what did we learn about the health of the advertising market for social media companies this week?
We're learning that people are continuing to spend. Is it the gold rush of 2020 and 2021? No. But are billions of dollars still moving into platforms like Meta and Pinterest and TikTok? Absolutely. And TikTok continues to be a platform that everyone should be watching. We saw massive amounts of dollars, again, shift away from platforms like YouTube into TikTok in 2022.